Welcome back from the break. We're going to go ahead and jump in. The topic of this is fighting financial crime amidst growing complexity. Not an easy task to do. We have a perfect lineup to help you all navigate through that thorny set of issues. So before we jump in, I'm going to ask each of the panelists to briefly introduce him or herself, and then we'll dive in with the questions and get the discussion going.
Great, thank you, Troy. I'm Eric Goldberg. I'm a partner in the Consumer Financial Services Practice Group at Ackerman in Washington, D.C. Before I joined Ackerman last fall, I was managing counsel at the CFPB, where I was responsible for the Bureau's payments regulations.
Kayvon Alakani, CEO and co-founder at Compliance.ai.
Faisal Lunis, I look after the anti-fraud framework, policy and standards at Credit Suisse.
Hi, I'm Kate Salatolo. I oversee PayPal's global AML program as well as their brand risk management program.
And as was mentioned, I'm Troy Paredes. I now have my own consulting practice, Paredes Strategies. And at an earlier point, I've been in governments, had a chance to see these issues from a variety of different vantage points. So again, very much looking forward to the discussion here. Let me go ahead and start and dive in, as I said, with Kate. So we can think about fighting financial crime from the perspective of a financial institution. We can think about it from the perspective of a regulator. We can think about it from the perspective of companies doing business and thinking about counterparties and all the rest. But why don't we look at it from the perspective of a consumer and what that then means from a variety of different vantage points. So if you could share some of your perspective in terms of what the impact is, the consequences for the consumer, and then how that affects you and your colleagues at your firm in terms of how you approach this question.
Yeah, sure. So if you think about PayPal, for those of you who are familiar, I'm sure you all have PayPal accounts of some sort. We service consumers and we have a merchant business and a whole variety of product offerings. And if you think about who we cater to, a lot of our customers are of a younger demographic. A lot of our business customers are startups and just starting out. They may not have credit. They may not, have a huge web presence yet. And so education to the consumer is increasingly important for us within the financial crime space. So one of the things that we are working a lot on is consumer education, right? We have customers who are really mostly on their mobile devices. They're not necessarily even on a computer going to a website. So when you log into your Venmo account and you're doing peer-to-peer transactions, it's important for us to educate that, those are primarily friends and family transactions. You shouldn't expect to be purchasing something through a merchant, right? And you may not be protected in the same way that you would if you were transacting through a merchant account. And so we do work a lot to try to educate consumers on common fraud schemes and scams, and to look within our investigations that teams within my organization are doing day in and day out. Where are those opportunities to educate consumers, right? The fraudster is always one step ahead, and we're always trying to innovate and educate our customers where we can.
If I can just ask one quick follow-up on that. What have you found by way of education is most effective? There's lots of ways to educate. People are getting bombarded with stuff all the time. What has allowed you, when it has allowed you, to kind of pierce through and really do something that's effective?
I think real world examples, right? So even education to some of our customer service representatives as we see, a common fraud scheme, trying to provide some advice and education where we can as a company. We've done a lot of benchmarking as well. Certain financial institutions have invested a lot in sort of user-facing websites. Western Union has a whole, fraud consumer-focused web page with tons of great resources. So we benchmark there, and pulling that information and making it accessible to users, I think resonates with folks.
So from the Credit Suisse perspective.
Yeah, Kate touched upon a very important point around customer education. From a consumer fraud, external fraud continues to be a primary concern for all financial institutions. Unfortunately, we still see a trend of members of the public being defrauded through investment fraud, through social engineering, through cyber-enabled fraud. I think with the increase of cyber-enabled fraud, particularly when you start segmenting different customers, we see that those which are more seasoned customers require more support in regards to cyber hygiene, and that's something that we do with more of our customer segment, which is more seasoned, to provide tailored cyber hygiene advice. But at the same time, we, on the other side of the spectrum, we have high net worth individuals, particularly those from Asia Pacific, which are, some of them are millennials, and they're very familiar with some of the cyber security guidelines and the cyber hygiene that they should have. So we try to tailor our program depending on the customer segmentation.
And in terms of how you think about it from a PayPal's perspective, in terms of the nature of the financial crimes that you may be focused on versus, say, a Credit Suisse with an institutional client base, when you think about financial crimes, do you think about them differently? Do you think about the risks differently or the nature of the risks differently?
Yeah.
Yeah, I mean, I think in any financial institution, it's about the products and services you offer and kind of what the normal activity is, and any kind of fraud scheme or data breach or, you know, compromising of identifying information, the impacts may be different. You know, for us, we have tons of users, but individually the transaction volumes are, you know, on average $60 per transaction. So you're looking at a very different way of monitoring for patterns and anomalies and trends than where you have, you know, clients who are potentially, you know, moving larger amounts of money through different means.
Yeah, and I think the other thing I would add to that is, obviously we have a monitoring program in place to monitor those transactions, but ultimately what we are seeing, particularly around the consumer fraud space, is an evolving change of modus operandi. And I think the only way that we're able to actually capture that is through ongoing dialogue with our peers. So a lot of things we do is to have common theme type meetings with our peers, with enforcement agencies, with intelligence agencies, where we formally and informally report some of the common fraud typographies and some of the schemes that we're seeing within, obviously, welcoming the enforcement agency and intelligence agencies as part of those forums. I think all that learning and exchange that we have through those forums help us. And I'm just thinking about, you know, as a result of the AML scandal in Scandinavia with Danske Bank, one of the initiatives that a lot of our peers are trying to copy is having a dialogue around how do we ensure that we start sharing some of the best practices around knowing your customer and that documentation, obviously without breaching any privacy laws.
Kayvon, technology.
Yeah, absolutely. I think the standardization of sharing tokenized data, headerless information amongst banks, something that we've already seen happen in the cybersecurity world as it relates to breaches to a certain extent. Sharing what type of breach happened, what type of identities were compromised. That's from one side. I think banks coming to that realization to the extent that there's a balancing act between that activity and what regulators are deducting from that information. That's one side of it. From the other side, KYC, as you said, you know, getting better and better at that. Technology is evolving in terms of identity verification and that initial identity assurance to the point that you can take advantage of new up-and-coming technologies. One that may be a little bit controversial in terms of blockchain and the use of end-to-end encryption and end-to-end signing of what happened within the transaction could be very helpful in lowering the burden from a anti-money laundering perspective. And then finally, of course, monitoring and extracting trends and patterns. I think to Kate's point in terms of risk profile and risk posture based on the organization that's providing the service, the financial service, but also from the clientele, whether it's a consumer or an enterprise or a large enterprise. There's now very good technology around in terms of modeling risk and in terms of determining normalcy and abnormalcy depending on the basically profile that you've built around the type of organization or user that's around. So I think risk from one side, identity assurance, and thirdly, more collaboration, data sharing are three trends that we're seeing.
And Eric, if you think about the technology side of things, and you think about it in terms of you practicing law and advising your clients in terms of how to build their compliance program, in terms of regulatory expectations, what are you telling clients in terms of what technology allows them to do and what regulators may be expecting of them?
So it's interesting, the FFIEC issued guidance back in December on how to use technology in your BSA AML programs, and they sort of gave a two-sided coin. On one hand, they said, yeah, everyone should use technologies, we're going to work with you to develop pilot programs, and we think this is really great. And then on the other hand, it said, but none of your obligations go away. You're still required to comply with everything. So try all this new technology, but if it doesn't work, we still might be at your doorstep coming after you. So navigating that is really tricky. So we hear that things like blockchain and AI, they sound like great ideas, but if you're not able to convince the regulator, at least work with the regulator to show them how it will work and get some real world pilot programs of that, then it's a little bit difficult to just go, dive in off the deep end and just completely adopt these and then abandon sort of the tried and true methods, even if these things are sexier and maybe in the long run cheaper and more economical.
So are you optimistic in terms of the regulators' approach and the way in which they'll ultimately accommodate, if you will, or make changes to the regulatory regime so that if you adopt some new technology, it actually is okay if you no longer have the traditional tried and true policies and procedures and lexicons because you have another way of doing it? Are you optimistic?
So I think I'm optimistic if people develop programs in a way that they're working with the regulators, showing them the early results. I would not want to recommend to someone, go all in on AI, don't tell your regulator what you're doing, and then have them show up and say, well, this doesn't really work. You don't have the data to show that this actually satisfies your legal obligations. So the regulators have some leeway within the rules to work with you, but ultimately the laws are what Congress put out there. They don't have a lot of leeway if you're not satisfying your legal obligations, and that's where you would experience a problem. So if you're proactive with them, you engage with them and get some early feedback to the extent they're willing to give that to you, before you invest a lot of time and money, it's probably a better path forward.
And so, Kayvon, you mentioned you're more on the technology side of things. So as you're thinking about developing technology that's going to serve the identified purpose of fighting crime and all of its particulars that you may be focused on with respect to particular technology and its application, are you thinking about the kinds of things?
Oh, it's a must-have. I think regulators at the end of the day cannot, won't accept a financial institution blaming it on the machine. So they ultimately want somebody accountable. So transparency, transparent AI, show me the proof, show me how you came up with the decisions, Glassdoor into the technology so you can see the model and how it's behaving and what percentage of the content was processed automatically versus human input is an absolute must-have. We think that it's just the right way to approach it, and finally it allows for that level of confidence for the organization to use it. But look, with anti-money laundering approaching $2 trillion per year and only less than a percentage of it being seized, according to the United Nations, 2018, this is a big enough problem. So if technology even allows you to hold a candle and kind of increase that 1% to 10 to, sorry about that, go ahead.
No,
You wanna add something?
So how much is it the following? The technology, set aside the regulators for a minute and their acceptance of these technologies as a substitute for what folks have been doing forever. So set that to one side. You got the technology chops to do all the stuff you're talking about, but you got to bring that technology to bear on the right data and a complete holistic view of the data, because if you're only seeing a piece of it, well, you may miss the pattern, to put it simply, that the data allows you to see if you had all the requisite data. How difficult then, to put that simply, is the data piece of this so that you can marry up the data you need in order for the potential that the technology has to achieve the reality that you're trying to achieve?
Yeah, I mean, it's big data being both a blessing and not so much if you're not careful with it and making decisions based on noisy data. So it really comes down to, I think we were having a conversation with Faisal before this, forking out based on geographies even, not just based on profile of users in terms of high net worth versus consumers spending less amount of money on average, but also where are they operating, what's established normal, where's the volume of fraud actually happening, and having a different model and different level of risk posture and acceptance within a specific region. And we were even talking about specialization for that region being different on a geographic basis, if you want to.
Yeah, no, absolutely. And I think, although I know you tried to kind of separate the regulator view, but the more we talk to regulators, American versus Asian versus European regulators, they all have their nuances on how to look at risk. And I think there is one common theme that we see from our discussion with regulators, which is the ability to look at the data from a multiple risk perspective or holistic perspective, as the kind of common keyword is. And I think as regulators become more and more familiarized with AML versus ABC versus fraud versus sanctions versus PEP, data, they want to be able to see how do organizations can consolidate all of this and be able to showcase and evidence how they are mitigating fraud risks holistically. And I think that's the challenge, and I think that's going to be a continuous trend and a requirement as regulators also navigate through their maturity.
Kate?
Yeah, I would echo that. I think if there's one, topic that resonates certainly across us on the panel and probably most of you, would be that concept of holistic risk management, right? And I think all of us are familiar with many different silos within a financial institution, and these people do fraud, and these people do AML, and sometimes they don't even talk to each other, and there's a whole other group that will do financial exposure risk, and they've all got their own models and triggers and scores, and we don't often have a kind of single view of who's pinging across all those triggers at our company, and what decision do we make when looking at it on aggregate, right? So what if you do have that customer that seems to present with a heightened AML risk, but they're also a merchant in a high exposure risk category? Are you looking at that score? Are you talking to the underwriters? Are you making a decision across risk lenses, is what we like to call it? And that's really not easy to do, and that is really a technology kind of a key place for technology to come in and pull that data together, unify some of that logic and methodology, and still be able to see what type of risk is elevated. But if you're kind of cutting it close across many categories, then we can call it as a whole from a compliance standpoint.
And on that approach to getting the holistic view, trying to identify the risk, a lot of what we've been talking about, I think implicit, and tell me if I'm wrong about this, seems to be oriented around something bad has happened or is happening, and how do we detect it? That's important to be able to do without question. It's also important when you can to make sure the bad thing doesn't happen in the first instance. So as you think about what we've been talking about, technology, fighting financial crime, having the data you need, having holistic view, building the compliance program around that, where does not just how do you detect it when it's happened or is happening, but how do you prevent it in the first place factor in? Can you take advantage of some of the same technological advances on the stopping it, not just detecting it when it's happening?
I would say yes. I mean, I think the second in our ecosystem a customer starts that onboarding process, you're being watched, right? From the second you start typing, there's research that can be happening, external information, like who is this person, who's the entity, what do we know about them, at the moment they're coming in the door, even if they're not, in front of you in a brick and mortar location, which we obviously don't have at PayPal, but technology allows us to understand, as soon as data enters that system, the footprint, of that customer, potential customer, and in that way, it's got to be done early, as soon as someone, is creating that information. And then certainly post-transaction, but that doesn't always mean after they've done something wrong, right? You're automatically starting to create a profile through your transactions, the speed with which they happen, where you're logging in from, who you're transacting with, and what we know about that person. So every data point at every side of that transaction becomes part of how we prevent, that anomalous transaction from happening. And when it does, then on the back end, we deal with it.
I just wanted to add, that's one side of it, the consumer side. And the flip side is over $340 billion worth of enforcement actions against the organizations themselves, the financial services orgs. Just in the past 9 years, less than 10 years, we have an astronomical number of enforcement actions. That in and by itself, from a tracking perspective, monitor what your ecosystem of organizations are doing, where were the violations, who were the respondents, what patterns of violation are you seeing, so you can avoid falling into the same pitfalls. So that, from a monitoring perspective, I feel like it's a yin-yang. From one side it's consumer behavior, but from the other side it's looking at the organizational behavior and seeing if you can prevent having the same results.
Yeah, I would just step back and layer on to what Kate said. It's not even so much once your customers start interacting with you, but even earlier when you're designing a product. I work a lot with payments companies, and all they want to do is make things more seamless and quicker and onboarding faster and the payment flow smoother. And you've seen with some of these products that's where the fraudsters trick people into sending money to the wrong person. And you want to think as you're designing your program whether that creates other risk whether it be with the CFPB or other agencies that are saying, you're enabling fraud in a way, your customers themselves are fine, but who they're sending money to or how they're interacting create problems with how the product's being developed in the first instance.
How difficult is it, because it's come up a few times already, the outlier behavior or the outlier transaction. It's one thing to say it, it's another thing to figure it out, and in part that requires, as Kate, you were saying, having a good sense as to what the baseline is, and that itself is not such an easy thing to do. So the simple question is, just how hard is that? It's a really important piece of it, but just how hard is that, notwithstanding the advances in technology and the data we have access to?
Yeah, it's a great question. If you look at, as you mentioned, some of the enforcement actions in this space, most of those cases, the companies had the data they needed to find out where the crime was. They just didn't either look at it the right way or they turned a blind eye. So one is just, I think someone said you need to step back and see all the things you have and really look at your individual customers and where you're getting complaints and where you're having trouble, and then who's using your system and how are they using it, really understanding how it's being used, and you got to be nimble because the fraudsters move, as we know, move quicker than anyone, and seeing, as you see shifts in your business or things that don't look right, just being able to move very quickly. And a lot of those maybe have innocent explanations, but being able to sort of latch onto that. And that's where you've seen the regulators often have concern, is when those shifts have happened, the company either has willfully turned a blind eye because that's an area of profit for them that they didn't want to really delve too deeply, or they just weren't able to step back and look at the big picture.
Well, I think the other element to that is, typically as financial institutions, we look at new products to reduce the number of false positives, to become more nimble, more agile. But I think if you look at all the enforcement actions, the main challenge that big companies or companies have been operating for a while is, how do you perform a historical look back? Because when the regulator hits you with a fine, it's probably going to be based on a historical period. And the historical period will probably bring up a number of issues that you may have due to legacy data, legacy systems. So I think, as some of you as fintechs and regtechs, I think when you try to focus on building a solution, I think that's probably one of the key requirements that FIs probably need assistance with across the industries. Is how do I identify those historical issues before they get into the gravity level that you get enforced with a fine or more.
When you take even a different kind of step back and put this into the broader context of trying to build a compliance program that is going to be effective at detecting and preventing and reacting when something's happening, there's a lot of collective experience and wisdom and perspectives on this stage here. I think it'd be great, in whatever order you want, kind of lessons learned type question of if you take everything you've said, all your experience, and you're thinking about how you're going to build that kind of compliance program, is there something over the years that you've seen surprises people, either in terms of what proves to be particularly challenging or what proves to be particularly effective in terms of building that compliance program, that risk management program to, in fact, fight financial crime? Any takers?
Looking at it from technology perspective, I'm super optimistic. The tools, services, type of processing that's available today that was absolutely unavailable 15 years ago, the willingness of FSIs to take on SaaS-based solutions that can solve a problem as opposed to going through major lengthy deployments and requiring things to be CPE, and of course the availability of big data and ability to process it at a fraction of the time that was possible earlier, make a whole new sets of patterns available for risk management, risk assessment. That's one side of it. And you were saying what pitfalls. I would say that the biggest, in my opinion, has to do with lack of information sharing. If you're operating in silos and companies are going through the same issue over and over again, and yet across the industry, this has happened to 15 of their colleagues, and with one set of, again, tokenized, headerless, privacy retained type of information sharing in terms of patterns of behavior, you could achieve, in my opinion, much better. That would be a big lesson learned, is you would have achieved much less in terms of fraud, in terms of money laundering.
Yeah, and I'll just echo that, but also kind of from a different lens. So I think I guess throughout my experience, and I've done before Credit Suisse, I was a forensic accountant, so I've done a fair share of fraud, bribery, and corruption investigation. Now I've seen kind of a change from how organizations deal with financial crime, which is siloed, regulation-based, tick the box, to the business itself, the front taking the ownership and saying, you know what, this is my risk, I'm going to be accountable, I could be in jail. Right? So I think that shift of the mindset has led to a more proactive approach. So whether it's Credit Suisse or when I'm talking to some of our peers, the conversation is different. You know, we do have to provide a business case whenever we want to invest in a new product or to roll out a new technology, but there's already a proactive question from the business saying, how can we mitigate even further? Right? And I think whereas 5-10 years ago, that was seen more as, okay, the regulator asks us for X, let's just give them X. So I think that the conversation has changed the dial.
Yeah, I would agree with everything that's been said. I think one area that I've seen that's obviously critically important are the people that are part of the program. And, you know, in a lot of, I think, historical compliance functions, it was very operational, very, you know, check the box, get it done. It's like a line mentality, you know, and in my experience, taking a look at the employees who are actually on the front lines, doing investigations, reviewing transactions, writing up reports, those are the folks that, you know, oftentimes we need to invest in them, make sure we've got the right skill sets and capabilities and training, because they're really running, you know, the day-to-day, and they're the ones that are, you know, going to have that suspicious activity report that was either filed or not, and then being scrutinized on the back end. So it's really investing in the people, both from an investigative standpoint, but also the proactive detections. Do we have the right level of data capabilities and folks who are able to crunch that data and think about it in a way that we could find and detect activity that we're not comfortable with? So there's a lot in terms of, you know, first acknowledging that compliance is part of the business, that there's accountability, and then invest in that business, you know, and make sure we got the right talent doing the work.
Yeah, I would sort of answer that, following what Kate said, but from a slightly different perspective. I've been working a lot with some really small, very new fintechs that are just entering, or companies are entering financial services for the first time. And there's two types. There's one that's like, let's see how we can avoid every possible regulation and still go to market. And the other's like, I understand we're entering a regulated industry. Let's go about this smartly. You know, we obviously don't need to comply with things we don't need to comply with. But knowing what you're getting, if you're starting out, you're in a new company, knowing what you're getting yourself into, what's your plan for how you're going to deal with that in a serious, legitimate way? If you're constantly trying to, you know, swerve in and out of the regulations, eventually, one, you're not taking it seriously. You're going to have a problem. You're not going to have the holistic picture that we've been talking about, and you're going to find yourself in trouble and probably spending a lot more money and angst down the road.
And so in the few minutes we have left, part of this is the technology and what its capabilities are, including the regulatory acceptance of it over time. Part of it, from what a number of you said, is organizational, whether you think about that in terms of the sharing of information, mindful of when you can't share information, but the sharing of information, as well as the breaking down silos, so you get all those different perspectives. So we can call that organizational. If you had to pick, which one is the greater challenge, the technology or the organizational side of it? Which is the greater challenge in terms of trying to make sure that you can get all out of the potential that is available?
I mean, it's definitely the organizational one. I mean, you're talking about, you know, human nature, different personalities, historically silos due to political or budget related issues, and I think trying to unify a common approach, and sometimes actually regulatory requirements push that in a really positive way, to look at how can we integrate, and going back to Kate's point, how do we integrate ABC with fraud, with AML, with sanctions, and having this multiple risk respect, because we need to, one, adhere to the regulators, two, it makes business sense, And 3, you know what? We're actually saving money by having this view. And I think that if we're able to put all those 3 components and having that argument to the organization, I think that is probably a good case to have.
One thing I would say, wholesale replacement of a system to use new technology is impossible. We found that to be the case. It's like changing the wheels of an 18-wheeler while it's going down 70 miles an hour on a freeway. So RegTech, actually does a good job of breaking it down into nimble pieces and providing interoperability. Maybe you don't want to change a part of your workflow automation or risk assessment, but you do want to change the monitoring or the data that gets fed into it. Maybe you don't want to change the way that your employees are reacting to risk, but you do want to change the way that they're notified or the information is presented to them. So breaking it down, we think, into smaller pieces and smaller, more nimble solutions makes it more tangible for larger organizations specifically to kind of absorb that little by little and do basically comparisons of a new approach compared to the legacy approach that they're taking over time and then adopt that. So it's not going to be overnight, but I think that RegTech, by definition, provides a good vehicle for that.
Yeah, I would echo that. Certainly the people you have set the culture for your institution, and you can spend all the money you want on fancy new technology, but if you're not implementing in a way that shows you're serious about complying, then you're going to run into trouble. If you look at where regulators have come after people, it's not that they didn't buy this company didn't buy the right computer systems, they didn't have the right culture of compliance, they didn't take it seriously, and they didn't try to actually put their full effort into complying, is where they often run into trouble.
Kate, any other?
Yeah, I mean, I think organizational, structure and challenges that an organization may face have to come first. I think by doing that, we then can harness all of that technological work and unify roadmaps and continue to focus on ensuring that we're ticking off the right regulatory requirements, but according to a consolidated strategy, right? A unified strategy. So I do think that's the direction the industry is moving more and more, and it's enabled because we have these technologies that can actually allow us to see things on the aggregate instead of having to build things in segmented ways.
Well, the one thing I would just throw in as we wind down here is that regulators themselves, as they are expressing publicly at every occasion, are making greater use of technology in terms of their effort to understand the marketplace, to inform policy judgments, rules, what have you, in terms of their supervision, inspection, examination functions, as well as in terms of their enforcement efforts. And so I think being mindful of that, you had mentioned lessons learned. One way to think about lessons learned is learning from your own experiences, right? This business had an issue, might this other business have an issue? Those sorts of things, important to do. Learning from others' experiences, right? This institution just had that issue. Do we have that issue? Let's hope that we don't, right? There's that sort of lessons learned. But I think it's also important to pay attention to what the regulators say directly and indirectly about their own approaches, their own capabilities. Because in part, I think that reflects what, over time, their expectations will be of those they regulate.
Yeah.
If the regulator is using data and different technologies to fulfill their regulatory obligations, they may, next time they show up, say, hey, what are you doing in that respect? Which comes back to what, as you mentioned, is the tough question. At the same time, I think if you all of a sudden say we have this brand new technology, we're going to get rid of everything, it's a process as compared to a flip the switch. But I think if anybody is wondering what to take away, hopefully you're not from the panel, it was extraordinarily insightful, but I think a big picture takeaway, the 50,000 foot level takeaway, is you got to focus on not only these issues, but you got to focus on the changing technological landscape. But I think what was really important is to not lose sight of the tried and true focus on the organizational aspect of things as well. And think about what those potential technological opportunities are. Think about the organizational structure and always be in the mindset of going back and reassessing not just your risk profile, but making sure that over time your compliance program, your risk management program more generally is fit for the responsibilities. You can have a compliance program that today is fit for purpose, but things can change in the ways that we've been talking about and shortly thereafter, it may not. So that sort of continuous improvement, as everybody likes to refer to, I think is not just a throwaway tagline. I think it's something that folks need to take seriously and actually have embedded into how they approach compliance and risk management more generally. So with that, if you'd rather join me in thanking, got the order here backwards, the panelists, that'd be great.